Welcome back, guys. Where there is a will, there is a way. So, from my childhood, I actually follow that word or that quote. Where there is will, obviously there is a way. So, if the voice is clear, if you can hear me, please let me know that before going inside the deep dive section. Let's confirm. Write down. If you can hear me, just write it down. Oh man, we can hear you or not. Stick trader. Let's go. Let's go, man. Let's go. I just need to be confirmed first that you can hear me. And in the meantime, if you can hear me, please don't forget to give me the like before just joining to my the live. You have to give me the live. The like or thumbs up, whatever you say. I need that before going further. Okay. So ECW clear. Thank you, brother. Thanks for confirming. Okay. So when it's clear, I'm free to go. I'm free to fly. So this is the dollar index, and today is Saturday. Every week in the weekend, either in Saturday or Sunday, you have to do the weekly analysis. The first thing is you have to expect the next candle. What do you think about the next candle? You can go with the precision. Any kind of fair value gap, order block, liquidity, anything. Okay, you can go with that, or you can just assume. You can make an assumption about the weekly expand, which way it will expand. If you think this week price will go higher, and if you get the higher run, maybe in Monday or Tuesday, you take a trade, you just take a trade, you are profitable, just quit over there. Just quit over there, okay? You don't need to take more trade every single day in a week. You shouldn't think like that way. Every single day you will be right. That's not correct, man. That's the wrong concept. Most of us actually hold that concept that every single day I have to take entry, and when we get an winning entry, then we start to take more entries, and at the end of the day, maybe we are on the losing cycle. That is the psychological issue. You have to work with that. Now you can see this is the last week candle, and it's kind of indices, not indices, indecision candle. Okay, that means I have a week lower, I have a week higher, bodies over here. And also if you see, it is the inside candle. This candle is just inside that big candle, this previous week candle. I told that if you see this type of inside candle, this candle is inside that candle, I actually expect some kind of higher expansion or lower expansion. That means the very next candle that will expand either lower or higher, but I will get the expansion. Okay, so that is first thing I'm thinking. As I'm seeing this candle as an inside candle, I will think the very next candle, it will expand either way. Now if it would love to expand higher, just for example, okay, if I see price started to go higher, and when it will go above that high, I don't think that it is gonna be retraced from there. I will start to think, okay, it will expand more high. Then if it would love to go lower one more time, it can go whatever it would love to do, it can do that. If I see market is actually going lower, it is very near to that low, I will start to think it will expand more lower. Okay, after that, after going so far from that low, then market would love to go back again into the range, or if it would love to continue lower, that's a different matter. So this is the first thinking about the price after seeing the candle. Hey brother, hope you are doing great. I am fine, man. How are you, Ronald? How about you? Everything is cool, man. Everything is cool for me. So you can see the prices over here. I'm just watching. This is the weekly chart, okay? Don't confuse. This is the weekly chart, and I can see a fair value gap over here from the weekly chart. Now this part is little tricky. Sometimes we see some kind of price action where we can't go with the precise what to say, the expectation. What do I mean by that? You can see price came here to here, so that is the run. It came to the fair value gap, the inversion fair value gap from the weekly. So it came over there, then it went lower. Where did it came? To the last fair value gap from the weekly chart. very nicely it has been rejected. Where did it came? To this weekly fair value gap. After rejecting from that weekly fair value gap, I have another fair value gap over here. Okay, so how many things I have all together into this little price action? Don't think this is the weekly chart, just think this is the 1 minute chart. If you see this type of price action, how do you take your decision which way price will go? This is kind of the place where you shouldn't expect something. If you expect something and you act with your expectation, there is much more possibility that you are going to take a losing entry or maybe a losing week. Great brother, that's cool, man. Thanks for listening that. I mean, I'm happy to listen that you are doing great. I mean, I would love to I would love to see that everyone is writing down great and great. No more frustration over here. I would love to make a hopeful community over here. So you have to think the price like that way. Now price came here to that fair value gap. It is reacting from that fair value gap. It went, I mean, it just make an indecision candle over here. I have the fair value gap over here. This fair value gap, I have above that one. I don't have sell side liquidity. I mean, very near, I don't see any sell side liquidity, but I have very clean buy side liquidity over here. When I'll be in the lower time frame, you will see more buy side liquidity comparing with the sell side liquidity. Okay. So when I'll be in the lower time frame, you will understand more price action. But from the weekly chart, yeah, I want to see a lower run to that specific fair value gap. Okay, that means I would love to see this type of things. Okay, it will come here to this fair value gap, then it will give me another retracement or something like this. Okay, that is my expectation, little expectation. I won't go for that. If you are with me for long, you know I told like that way, market is going over there or market is going over there, something like that. But now is the time. From the last week also, I wasn't sure where it will go. I was waiting for the lower time frame confirmation, then I act or I react with that price action, because this is the place where I have no idea where price is going. I saw most of the people are thinking price will react from there, that fair value gap. I mean, other YouTuber, okay? They're thinking price will react from that weekly fair value gap and it will expand lower. It will take that low. Finally, it will take that relatively equal lows. Okay, that is relatively equal lows. If you go to your lower time frame, you will see this is the lower. I mean, relatively equal lows. So they're thinking like that way, but I'm not agree with them. I would love to see how price react over there, because from the monthly chart, I'm expecting price will come here to that weekly fair value gap and the monthly inversion fair value gap. So from monthly chart, I'm expecting price will come here, but from weekly chart, as we are inside a week, we don't need to go to monthly chart. We can analyze our chart from the weekly chart. From here, I am now confused where price will go. The last fair value gap, it hold the price, so it didn't give me any sign that it would love to go lower. When it didn't give me the sign, instead of that, it has traded the monthly week CE, consequent encroachment, perfectly. It came to that week consequent encroachment, it went higher. If you see from the weekly chart, you can see it came to the consequent encroachment of the last weekly fair value gap, rejected from there. Now it come to this weekly fair value gap and price is just over here. So I need more price action to determine where it will go. Right now I'm in indecision about the dollar index. My little hope is it will come first to this fair value gap, then it will expand higher. That is my little, okay, I mean 0.5% expectation. Now I will go to daily chart. So this is the daily chart, and you can see this low and that low. Okay, they're relatively equal lows. I think nobody has any confusion about the liquidity. That is my draw on liquidity. When price will start to go lower, that will be my target. This sell side liquidity will be my target. Why? Because this is more clear. Okay? I don't go for one single low or one single high. Okay, I always go for relatively equal highs or relatively equal lows. If you see over here, there is much more stronger buy side liquidity over here. Okay, that low, I mean that high, all of those highs, it has made this relatively equal highs much more stronger comparing with this sell side liquidity. So I'm expecting price will come here and it will take that buy side liquidity very soon. That is my expectation. Then when price will reach to that area, that is the monthly inversion fair value gap and the weekly fair value gap. Okay. When price will reach over that area, after that, this sell side liquidity will be targeted. That is my expectation, but I explained it. I saw most of the YouTuber or the mentor who are very popular. They're expecting lower run from that weekly fair value gap. Now that is the place I am in indecision. I don't know what price will do. I have already explained it from weekly chart. Now I will be here in daily chart. I will explain it one more time. Okay. What about that unmarked fair value gap under the weekly fair value gap? Unmarked fair value gap under the weekly fair value gap. Okay, so below this weekly fair value gap, where is your fair value gap? I mean, I don't see any fair value gap over here. Did you? I don't know, brother. Which fair value gap you are talking about? This is my world. I mean, I have marked the fair value gap. All I have in this price action. Okay, so this is the price leg from here to here. Inside that price leg, I have this fair value gap, that fair value gap, and finally this fair value gap. So I have this three fair value gap inside that leg. Now prices under this price action or dealing range, I don't need to see the price. I mean this fair value gap. If you are talking about this one, this is the fair value gap from monthly chart, and this fair value gap I don't care about that right now, because if market would love to go lower, if I see the sign when this weekly fair value gap will be broken, then I will be sure that market is going lower and it is going to take that sell side liquidity at least. Then I will mark that fair value gap. I mean this fair value gap from the weekly chart. Okay. So right now I don't see any unmarked fair value gap. I can see every fair value gap is marked. So I would love to come here, the daily chart one more time. So this is the sell side liquidity. This is the buy side liquidity. Now I have very clean buy side liquidity. I have very clean sell side liquidity. This is the place I am in indecision where market is going first. You can see price is falling, right? Price is falling, retrace falling, retrace falling. Now this is the first time when price come here this far. Okay, so I have the breaker. I mean low, high, lower, low. This is the higher breaker. It will be activate when price will go above that one. I don't care about this breaker right now. Okay, if I see price went higher, then retrace, that is for long time. Right now, let's see what price has done. When price come to this weekly fair value gap for the first time by that candle, that day, that specific day, Wednesday, 3rd January 2024. This is the first time when price come to this weekly fair value gap. After coming this fair value gap, it should expand lower. What it has done? It started to consolidate. So this candle, it has traded more deeper to that weekly fair value gap. There was a volume imbalance and the daily fair value gap. Everything I have over there. So this candle traded there. That's cool. When it has traded there, it also traded the lower fair value gap as well. So you can see there is another fair value gap from daily chart. This candle high, this candle low. So this is the daily fair value gap. At the same time, this is the inversion fair value gap. I mean this candle low and that candle high. That is the inversion fair value gap. I didn't mark it, but if you would love to mark it from your chart, you can mark it. In my opinion, that is valid inversion fair value gap. Why that is valid? Because this swing low failed to take at least that low. Though I would love to see it will take that low. If this swing low could take that low, I wouldn't mark that as my inversion fair value gap, as it failed even to take that low, even to fail to take that swing low. That is more confirmed inversion fair value gap. So market should retrace from there when it went through that fair value gap and come back again above that fair value gap. That is also the confirmation for me that market is going higher and taking that buy side liquidity. I want to learn from scratch. What do you mean by that, brother? Scratch? What does it mean? I'm a little weak in English. I mean English, so you have to explain the word you have used. So it's not my mother tongue. Okay, I'm sorry for that, brother. But if you can explain that, maybe if I know, I can help you. Okay. So I can see this inversion. Can I write it down? Inversion fair value gap? I think so. IAVG. Okay. Where to start for learn from scratch? Okay, where to start? A different matter. Man. If you don't have the basic, I don't know what is your level. So how can I actually tell you from where you should start? If you understand the fair value gap uh, or the 22 YT model, if you understand that, then you can continue with me. If you don't understand them, then if you would love to learn something from me, you can go to my YouTube channel, and from there the playlist, please watch all the videos from study section. That will be easier for you to understand from the beginning. Okay, the study section, every single video, if you take notes from there, I guess you will be at the level you are not thinking right now. So I think it will help you a little bit. And if you really don't understand what is the fair value gap or market structure shift, liquidity taken, then you have to search from YouTube, because I don't make any videos about those. Okay, I'm little bit intermediate level, not at the basic level. So all you have to tell me that you understand the 22 YT model or not. If you understand 22 YT model, then just go to study section, study all of the videos from there. You will be in a pro level. I can promise you, brother. Okay, what I was talking over here. Okay, so if you know that, then you just go to my study section, watch every single video from there. I will show it at the end of my life. Okay, just study them. You will be at the level you are not thinking where you will be reached. Okay, just trust me. You have to trust me, and just you have to follow the direction. That's all, brother. So let me actually continue with the price action. So in my opinion, it has came to this inversion fair value gap, and I'm getting the response. But at the same time, price came lower, failed to take that low. It started to go higher, and it started to consolidate. Okay, this is the consolidation, pure consolidation from the daily chart. Nobody can tell you where market is going. So you have to work. You have to wait until price leave this consolidation. So this is the level where you have to wait. If you wait, sorry guys, I just catch a cold, so a little distraction for that. I'm extremely sorry that this is the consolidation phase. Market came to that fair value gap. Market come this fair value gap. It is consolidated right now. So you need the signature first. Where market would love to go? This candle, all of these candles are inside that candle. Okay, so it has to break either the low of that candle or the high of that candle. What do I mean by low? I mean break. I need to see the body close. If I see a body close below that low, I will start to think, okay, market is actually going deeper sell side now. Maybe it will take that sell side liquidity. If I see market went higher and closed above that high, that is the sign that market is actually going to take the buy side liquidity first. Then the sell side liquidity will be more obvious. Okay, so this is the thinking about the dollar index right now. I have no bias. I have no bias. But if you ask me what I want to see, I want to see higher run. Market will go higher, and it will take the buy side liquidity. Then it will trade this weekly fair value gap and the monthly inversion fair value gap. Then it will retrace and take the sell side liquidity later. Okay. Right now, that is the thing I would love to see. When I will change my expectation if I see a body close below that low. Because when I will see a body close below that low, that is kind of sign of the market structure shift, because that low has traded that travel gap. So this swing low is more obvious, or you can mark that swing low as your market structure shift. So if I see a body close below that swing low, that is the confirmation for me that market is going lower. So I need more signature from the price to determine my bias. Now I will go to 1 hour chart. So okay, before going 1 hour chart, I would love to come 4 hour chart first. Okay. So from 4 hour chart, you can see I have another liquidity level over here. Okay, so this is the liquidity level from 4 hour chart. I mean, if you remember the daily liquidity was over here. Okay, this is the daily liquidity from the daily chart. I am now in 4-hour chart. Let me show it to you one more time. So this is the daily liquidity. Okay, this low and that low, they're relatively equal lows. This is from the daily chart, and I'm talking about the liquidity about here. Look over here, just there is my liquidity. So you can see this low and that low, they are relatively equal lows. Okay, now this is the 4-hour fair value gap. I mean, price has taken the buy side liquidity, give me the market structure shape. This is the fair value gap. Price come to this fair value gap, it went lower, try to take that low, failed. Went higher one more time, low. I mean, come lower, make relatively equal lows. It is respecting the 4-hour last fair value gap. Okay. Now this is the fake breakout. That is, I believe this is the fake breakout. Price went higher. The very next candle come back again inside the range. So this 4-hour 4-hour last fair value gap is actually holding the price. As I don't see any buy side liquidity right now, I will think market will go lower and it will take the sell side liquidity. Maybe it will trade that fair value gap, I mean hourly fair value gap, then it will start to go higher. Now I am just breaking down the time frame. See, from daily chart, I told you if I see a body close, that should be a daily candle. Okay, that should be a daily candle that will be closed below that low. Just let me mark that low, it will be easier for you. Okay, this is the low. If I see a daily candle body that has closed below that low, I'll start to think market is going to take that huge sell side liquidity. It's too far from that price action. Now I'm in 4-hour chart. See, this is the, where is that? Just let me actually change the time frame because it's not showing over there. So visibility daily out. Okay. So now if I go to 4-hour chart, this is that low. Okay, look at that low. There is my sell side liquidity. I would love to see price will come lower. It will take that sell side liquidity. Maybe it will trade that hourly fair value gap, or it can trade the inversion fair value gap from the daily chart one more time. But it will take that sell side liquidity. Okay, so I am going to make my time frame more smaller. Now my target is not here to that sell side liquidity. I am targeting this little sell side liquidity from the hourly chart or the 4-hour chart, because the last 4-hour 15-minute, I'm sorry, 4-hour fair value gap is holding the price. It is kind of sign, though we are inside the consolidation, I believe market will take that sell side liquidity, then it will go higher, it will expand higher. Now when it will take that sell side liquidity, maybe it will come to that consequent encroachment of the inversion fair value gap, or if it is overzealous, then it will come here and then it will go higher. If it happened from the hourly chart, if you see from the daily chart, you will see a wick. The wick will go below that low and it will take the sell side liquidity below that low as well. So I am not going to see a body close below that low. Instead of that, I am just watching, I'm just seeing a wick from daily chart. It is not breaking my higher time frame expectation that market is going higher. Now, if from hourly chart it went lower from that, I mean this is the hourly fair value gap. When I'll be at in hourly chart, you will understand the price, I mean the fair value gap. If I see it went lower and it closed over here, okay, at the same time the daily chart, I saw a body close like that. The body close will be here. Okay, if I see from hourly chart or 4-hour chart body close here, that is also same. When I will be in daily chart, I will see the same thing over there, a body close below that low. So that will be the sign market is going lower. What I don't want to see, what I want to see, I want to see something like this. Okay, so right now this sell side liquidity is my target from 4-hour chart. Now I will be in 1-hour chart. So you can see this is the 4-hour fair value gap. Market is over here right now, market is here. I have seen this relatively equal lows as my target from hourly chart, and price has traded that fair value gap. See, from the hourly chart, it has taken the buy side liquidity, very clean buy side liquidity. that high, that high, that high. All of those high had made the buy side zone, and this run has taken the buy side liquidity. When it has taken that buy side liquidity, it went lower, try to take all of those lows. Instead of that, it has made relatively equal lows. So that is the buy side liquidity. I mean, sorry, sell side liquidity. Where price came to this fair value gap, to this hourly fair value gap. Now I am in the hourly chart, and I am just talking about the hourly fair value gap. So this is my hourly fair value gap. Mark it as my hourly fair value gap. So price is right now to this hourly fair value gap. What it can happen, you can see it went higher one more time from hourly chart. It has, maybe it has taken that buy side liquidity, though I don't want to see that. I don't want to see that, but it can do. It can come back again to this 4 hour fair value gap one more time. Then it can expand lower this toward that sell side liquidity. Why I'm expecting lower run from the hour, I mean lower time frame? The reason is I don't see any buy side liquidity. I don't see any buy side liquidity. See the price action over here. When price went higher, that was very clean buy side liquidity, very clean buy side liquidity over there. Okay, and look, when price went higher, there was not, there was no clean sell side liquidity. So when price came to a specific level, after that, when it started to go higher, it just went higher, and it has taken that clean buy side liquidity. That was very clean buy side liquidity. It has taken that buy side liquidity. After taking that buy side liquidity, it came lower. Where did it came? To this hourly fair value gap. Okay, so there was the setup. Actually, I have already I have talked about this fair value gap before. So price come to this hourly fair value gap, it started to go higher, and when it came here, see this price action, nobody is believing that, I mean the retail trader, they are not going to sell over here because this is not a zone. Price is very random over here. But look over here, this is very clean. Price came here, come again here, this is the zone. Okay, actually let me mark the zone, that will be easier for you. So this is the zone. This zone, wherever price come here, it went higher. Okay, this time it failed, come here, no problem, they were waiting, and they have seen that price came here, it went higher, take that buy side liquidity. See, again it come here, it should take that buy side liquidity one more time. I mean, maybe this huge buy side liquidity, it's going to take that on, or maybe that on. So they are thinking like that way. Now, when they're seeing this as a support zone, very strong support zone, I'm thinking market will go lower and it will take that sell side liquidity. Whoever take their buy over there, their stop loss is over here. The market should take that stop loss first, that is the sell side or the buy stop over there. They should, I mean the sell stop, sorry, sell stop. So they should take that sell stop first. After that, after when it will retest much more lower, the retail trader who are thinking the support zone will be broken and it will be the resistance zone. Okay, so something like this. What market is actually do? It will go lower, then it will come here. So support turns into resistance now. Whoever actually didn't take entries over there, I mean that whoever didn't take buy over here, they were thinking that when support will be broken, I will take my sell over there, so that will be my resistance zone. They will take their sell over there, then price will come here. They will start to think, okay, let's take sell, everybody will sell over here, support turns into resistance, so they are going to sell over there. Market will start to go higher then, and it will, I mean, take more buy side liquidity. Finally, it will expand higher. Now, there will be some other price action, but that is my thinking right now. I will think the market right that way. So I'm telling you, this is pure consolidation. See, market is consolidating over here until price leave this consolidated area. You are not sure about, you shouldn't be sure about your bias. I'm not sure about my bias, but from the very lower time frame, I can see very clean sell side liquidity, and I can expect something from here that could work. So this is my expectation. Now I will go one more lower time frame, and that is the 15-minute chart, because this is the last chart I love to come for the dollar index. So from here you can see, I mean there is the sell side liquidity, and let me remove time. So this low and that low, they are relatively equal lows from the hourly chart or 4-hour chart, and also from the 15-minute chart. You can see this is the sell side liquidity, and price actually came to the last fair value gap first. It has been rejected from there. It went lower. It went higher. Where did it came? That specific thing. I mean that specific fair value gap. That is very important. But I told you what I can see. It can expand higher and it can reach to the last fair value gap from the 15-minute chart. It can reach over there. Okay, first before falling. It can happen. Now from 15-minute chart, if I see it can the last fair value gap hold the price and send it back below this 15-minute fair value gap, I'll be over sure that market is going to take that low first. If I see it has taken that low and a body close below that low, I will start to think it is coming to that last fair value gap. See this fair value gap from 15-minute chart. So really let me mark it. Let me mark everything. Okay. So what is my expectation? If it come here to that last 15-minute fair value gap, if before going, I mean before falling, if it start to go higher, that is fine because it will take that buy side liquidity. I'll be cool with that, but I will observe that 15-minute last fair value gap to that specific leg. If I see market is holding the price, then I will wait until this 15-minute fair value gap is broken. When I will see it's broken and price come inside this hourly fair value gap, I will start to think market is going to take that low. When I will see price will be here, okay, and it has taken that low, a body close below that low, I will start to think market will retrace. So there could be any 15-minute fair value gap later or the hourly fair value gap, anything. It will go over there, then it will come where? To that sell side liquidity? No, to the last 15-minute fair value gap. I have the last 15-minute fair value gap when price will stay. I mean, it will come here. It will come here. Either it will go through this fair value gap directly, or it will react a small reaction over there. There will be some kind of liquidity making things. Then it will take that liquidity. It will give you another setup, sell, and this. So this is my short-term expectation from dollar index. Everything can be changed depending on the opening, I mean the Sunday open. This could be changed. And as I told you, from very high time frame, I don't have any bias. I mean from daily chart, weekly chart, I don't have any bias. I see the consolidation, pure consolidation. But from lower time frame, this sell side liquidity is much more obvious. I would love to see market will take that sell side liquidity first, then maybe it will expand higher. That is my expectation from little chart. So that's all from dollar index. If anybody has any question, you can ask me. Okay. Otherwise, I will go to Nasdaq actually to talk about the Nasdaq. This is the part where you should ask me the question. If you have any confusion, any part you didn't understand, you have to ask me the question. Okay. So don't be quiet. I saw other YouTubers when they do live stream, uh, their viewers actually keep commenting, commenting. I missed that. Nobody asked anything to me. I don't know why you don't ask me the question. Maybe I talk too much. I don't let you talk. Is that type of things? I mean, I don't give you the chance to talk, and I'm just asking. Please comment something. Ask me some question. I really love to give you the answer. If you have any question, please ask me that. If you don't have, then write it down. Don't forget to give me the like. Okay? You can see there is like near about 13 people. I'm not a popular someone, but please don't miss the like or thumbs up to give it to me. Okay? And please don't be quiet. Ask me something. I really would love to answer your question. Please, this is a request, man. Sefard Akaria, very clear analysis, no questions from me. Thank you, brother. And I can see that there is some people who are actually alive, who are actually listening to me. Thank you, brother. At least for commenting, at least for telling me that you were there. So I don't know. Does it cost money? I mean, if you just comment something, do you need to pay? I really would love to know that. I'm just kidding, man. Okay, so we should move to NQ. So this thing is, I guess the dollar index is clear to all of you. Let's go to NQ. NQ. Dun, dun, dun. So here is my NQ chart, and this is the weekly chart. Okay, this is the weekly fair value gap. This is the last fair value gap from weekly chart. So do you trade breakers? Man, I trade so many things. I trade breakers, I trade I fair value gap, I trade normal fair value gap, I trade order block, I trade what to say, I trade SMT depending on SMT. In my life, maybe I take 0.01% entry depending on the turtle soup. I trade so many things. But if you ask me my favorite one, breaker is my favorite. It works 95% of the time. Thanks for asking, man. Right now, price is over here to the weekly fair value gap, and this is the last fair value gap from the weekly chart. Price is just over here. See, when price come here, that weekly fair value gap, that was a very nice reaction. Why did it come to that weekly fair value gap? Then very next candle, it come back again to this weekly fair value gap. Now, how do I think market is going to take that buy side liquidity, or how can I think market is going lower to that specific fair value gap? Because this fair value gap is very important for me. I can see a very nice setup over here. Market has taken sell side liquidity, market structure shift. This is the first fair value gap that should work as a breakaway gap, and this is the entry fair value gap. Okay, in my opinion, this two fair value gap is important. This two is actually the fair value gap. This one is the gap which doesn't I mean, it doesn't have any fair value. Okay, I see this gap as useless gap. Okay, something like that. And it should make some kind of liquidity first, as there is a liquidity over here, though this is not clean liquidity, so it can make some kind of liquidity here, or it can retrace from the last fair value gap. Then it should come to that weekly fair value gap. That is my expectation. Okay, so my expectation is before taking the buy side liquidity, it will come at least this fair value gap. If market is overzealous, then it will reach the breakaway gap. At this breakaway gap, I have the breaker, I have the order block, I have the inversion fair value gap. I have so many things in that specific fair value gap. So there is much more possibility market can come over here. Right now, market is actually uh, rejecting from here. Now, when market is rejecting from here, and if I would love to mark my breaker over here, there is another breaker for a longer term, high, low, higher, high. So, I mean, is that breaker? No, it's not breaker. Sorry, what? There was a breaker actually. I forgot where it was. Is low, high, low, low. Okay, so that was the breaker. Sorry, not that one. That was the breaker. So actually, price come to that breaker and went higher. That's cool. It has done its job because it has taken that high. That high was more obvious, so it has taken that high. When it has taken that high, uh, in my opinion, breaker has done its job. So when breaker has done its job and price has reached to the last fair value gap, I would love to see it is going to hold the price. When it will hold the price and send it back, I'll start to see that low first. I will expect market will take that low, then that low, finally it will reach here and maybe here. Okay, I'm not sure about this one, and it will take more longer if you would love to go lower. If it can go above that weekly fair value gap, then this buy side liquidity is much more obvious. I think it's clear from the weekly chart, because this is very small expectation from the weekly chart. We don't need to expect so many things. But if you see whole price action, you will start to think this is the reaction. I'm just getting the reaction from the last fair value gap, and this reaction should send the price until here. That is my expectation. I'm not telling market is coming here, because this is the place where I'm in indecision. I don't know where price will go. It come to the last fair value gap. It is actually respecting the this fair value gap. So I have a resistance fair value gap, I have a supportive fair value gap. Price is just inside those two levels. I'm now confused where price will go. Let me go to the daily chart. So this is the daily fair value gap, and if you see the weekly, just let me remove it. I mean, just put it here. Okay, so right now price is over here. See the price action, come here, it went lower. When it went higher, it has taken the buy side liquidity, market structure shift, it come to the breakaway gap. So this is the first parallel gap, this is the last parallel gap, it come to the last parallel gap. Okay, now I'm seeing clearly from the daily chart, it is actually holding the price. Like remember the weekly chart, when price come here, I got a reaction. I'm expecting the same thing from here, from the daily fair value gap. This is the last fair value gap from the daily chart. Though it's very small, but you can see it is actually holding the price. So I would love to see some kind of reaction. And the same, this candle is inside that candle. Okay, it is inside that candle. When it is inside that candle, the very next candle, I mean the Monday candle, I would love to see some kind of expansion. If it start to go lower, it went lower, then it will expand much more longer than the expectation. I mean not something like this. It will come low and take the liquidity from previous day's low, then it will start to go higher. Or it will just go higher, take the buy side liquidity, then it will come back again into the range. No, not like that. When it will go higher or it will go lower, it will expand. First it will expand, then it will come back. That is the expectation from tomorrow or the Monday. Okay, hey bro, I'm little late today. No problem, Remy, you can rewatch the first part. I have already done with dollar index, so I have just started the NQ. At the same time, it is actually holding the price. The last parallel gap is holding the price. I always force you to learn the last parallel gap concept. If you just simply can understand this, and if you are with me in my Twitter, you already know how many times I gave you the precision from the last parallel gap. So it is holding the price. If it failed to hold the price, this high is more obvious. Okay, now when it will take that high, I'm not going to think market is going higher, because until the weekly fair value gap is not broken, I'm bearish for Nasdaq. Now again, I saw other YouTuber, they are thinking market will go higher. I'm not agree with that, and I'm also not arguing with them. I need the price action. Right now I'm in indecision mode. I don't know where price will go. My expectation is price will go lower at least until here, and there is another fair value gap from the daily chart. As the same place, I have the inversion fair value gap. So what I can expect, market can come here to that inversion fair value gap or the fair value gap, then it will go a little higher. I mean it will take some kind of liquidity, then it will expand lower. It can happen easily, it can happen. All I don't want to see, this weekly fair value gap is broken. That is the thing I don't want to see. If it were, I mean if it is broken, I will start to think market is going toward that buy side liquidity. Now, do you need to understand or the whole price action from the weekly chart to execute your entry to 1 minute chart? No, brother. You just need 15-minute price action for executing 1 minute trade entry. Now, why do we need this? Because if you have a higher time frame bias, you can easily predict the price from 15-minute chart. So I am predicting the price from higher time frame, from weekly chart, from 50, I mean the daily chart, from hourly chart. That will help me to determine the bias from 15-minute chart. And when I will get the 15-minute bias, that will be much more easier to execute the trade in 1 minute chart. This is why we are at the higher time frame. But if you ask me, we don't need it at all. Just 15-minute fair value gap price action, I mean 15-minute price action is enough for executing the trade. Don't believe me? Just stay with me for some long, you'll understand that. So right now price is holding the price. I'm expecting to see it will reach to this fair value gap first. Okay, so it will come over here, that fair value gap. That is my expectation. I'm not telling that it will happen, but that is my expectation right now by watching the price over here. I'll go to 1 hour chart. I have nothing to talk about here, not anymore actually. So I will go to 1 hour chart. So this is the 1 hour chart, and just a second, then that, am I one line? I mean Can you hear me or can you see me or I'm just gone already? Can you tell me I'm still in one line or not? Okay. Um, Can you hear me, brother? I mean, everything is okay or I'm gone? I talk too much, I know, but you should talk sometimes. Otherwise, how do I know? I'm very confused. You're online. Okay, thank you, brother. Thank you, thank you, thank you, thank you, thank you. Hey, Bams. Bamsi, how are you, brother? It's been long. I didn't see your name. Okay, thank you. Actually, my net is lagging, so I thought I'm not in online. So let's talk about the price action from hourly chart. So this is the daily fair lookup. If you remember, I've just marked the daily fair lookup, so I'm not going to mark the hourly fair lookup. Okay. If you see, this is the hourly fair lookup as well, and this is the last fair lookup from the hourly chart as well. Okay. So price actually came to the last fair lookup and it hold the price, send it back. Now this is the inversion fair lookup. Actually, let me show it to you. This low, when price started to go lower, it failed to take that low. So this fair value gap, when it is overlapped, I mark that as my inversion fair value gap. Same rules again, again, and again. There is no other fair value gap below that low. Okay. Okay, Vamsi. Thank you, brother. For I'm happy to hear that. Okay, thank you, Amka. How are you, brother? I'm fine, man. How are you? So this is the inversion fair value gap. I mean, rules that actually made by me. I see the inversion fair value gap only depending on that swing low. If it take that low, now look over here. Okay, there is a swing low, price went higher, it went lower, and it has taken that low. So this is not going to be my inversion fair value gap. Let me actually mark the inversion fair value gap over here. So that low, this is not going to be my inversion fair value gap. Why? Because this low has taken that low. It has taken that low. It is not gonna be the inversion fair value gap. And which one I mark as my inversion fair value gap? If I mark an inversion fair value gap from a down leg, I go for the lowest one. If I would love to mark a inversion fair value gap from higher leg, I would love to mark the highest fair value gap as my inversion fair value gap. Okay. Okay, brother, stay here. We'll talk. Okay. Just let me finish the things first. Then we will talk. We will gossip for a little. Okay. So you can see this low, swing low, has failed to take the immediate swing low. When it has failed to take that immediate obvious swing low, this is my inversion fair value gap. There is no other fair value gap below that fair value gap. So this is the lowest fair value gap. And I have marked that as my inversion fair value gap. When price overlapped over there, this is my inversion fair value gap. So you can see price actually came here to that inversion fair value gap perfectly. Then it went higher. Now, this low I have marked as my inversion fair value gap again. Then why? It has taken that low, maybe that low. Then why I have marked this one as my inversion fair value gap? Because I see this is not, I mean, not swing low. This is actually the liquidity. So that they're relatively equal lows. This low, that low, that low. All of these are relatively equal lows. Okay, that is why all of this zone. Now there is this wick over here. I don't care about the wick. All of you know that I care about the body. I see this is a zone and this is the liquidity zone. So it has taken the liquidity, but it failed to take the obvious swing low. Like over here, that low is obvious swing low. See, it has taken that low as well, but I didn't mark this one as my low taken. But this is obvious low. It failed to take that obvious low. That is why I have marked that as my inversion fair value gap. Now, if you don't want to mark the inversion fair value gap, if you don't want to understand the inversion fair value gap, it's perfect, man. Because you have the fair value gap over here from hourly chart. If you just mark that fair value gap from hourly chart, that's perfect, man. See, it came to this fair value gap, first fair value gap, it went higher. If you just would love to mark that fair value gap, it come to that fair value gap, perfect. So you don't need to mark or force yourself to understand the inversion parabolic of what is it and why I'm going to mark that. You don't need it, but I would love to go with that inversion parabolic. Okay, parabolic on green candle through above inversion parabolic. I think here you are talking about this one, so I have already talked about this. So this too is the inversion parabolic and price come to this inversion parabolic first, went higher, failed to take the buy side liquidity. Okay, so this inversion parabolic didn't complete its job yet. It didn't complete. Okay, so it failed to take that buy side liquidity. Price went lower one more time, come to this inversion parabolic now. Two inversion parabolic is trying to send price higher to take the buy side liquidity. Now where did it came? It came here, failed to take that buy side liquidity. When it has failed to take that buy side liquidity, it started to go lower. What you should think over here? Are you thinking market is going lower? No, I'm not thinking like that way. Yeah, it can come lower. It can take that low for the liquidity taken. But if I see body close below that low, then everything will be changed. Okay. If I see a body close below that low, everything will be changed. I'm just repeating that. Okay. I'm just repeating that. For all I want to see higher run, it has to take some liquidity because every fair value gap or the inversion fair value gap, whatever, just fair value gap, they has a I mean they should have hold the price for what to say, the word should be goal. Okay, goal. So every fair value gap has a goal. When it will fill its goal, then it will be useless. What is its goal? Its goal is hold the price and send it back to take the liquidity. It failed to fulfill its goal. So when it failed, there this inversion parabolic gap appeared. Brother, you failed to fulfill your goal. No problem. I am your kid. I am your child. I am going to fulfill your dream. So I have the same goal. I will hold the price and I will send back to take the liquidity. If I am failed also, then don't worry. There is another, maybe when you will be in lower time frame, you will see another parallel gap that is that actually worked. They are the new generation. Okay, maybe they're the new generation. So they have hold the price and send it back for the liquidity. Though I don't want to see that as this market, and I'm not a financial advisor, so I can't tell you the way I'm trying to tell that it is going to do that. I can't tell you like that way. But if you ask me, I would love to see it will go higher. It will take the liquidity first. The liquidity when it will be taken, then if it will have to go lower, I'll be happy with that. So from the daily chart, if you remember, I was telling you market shouldn't go above. It should expand lower. Where it should come? Here it should come first. Now this is from the daily expectation. So from daily chart, I'm expecting lower run. Now I'm in 1 hour chart. In 1 hour chart, I'm expecting higher run. How long? Until it has taken the buy side liquidity. If it can take the buy side liquidity, then I will go with the daily expectation. It will start to go lower. Where? To that specific fair value gap. It will come to that specific fair value gap. But before coming here, I would love to see a higher run. Remember dollar index? There was a relatively equal loss from the 4 hour chart, 1 hour chart, or the 15-minute chart. Very clean sell side liquidity. Okay. What I was telling you there, it will take that liquidity first, then it will expand higher. Same thing over here. It will take the buy side liquidity first, then it will expand lower. So right now from the hourly chart, I'm expecting higher run. Now let me go to the 15-minute chart. Now from 15-minute chart, you can see that high and that high. Very clean buy side liquidity, very clean double top. Every single retail trader, they're thinking, oh man, we got our double top. So they take the sell over there. When next time price will be here, they will take the sell again over there. Why? Because they're confident. Now let me put it over here. That is little destructive. So over here, when price come here, it has made relatively equal highs. That is what they think like this. What is their thinking about here? they will see all of these highs as their resistance zone. This is their resistance zone. Now what we see, why price come here and stopped there. Let me mark the constant encroachment of that week. Very little week, okay? See where price came to the constant encroachment from that week from 15-minute chart. I mean, if you go to 1 hour chart, you will see it actually came to the exact 50% of the hourly week. Okay? So constant encroachment. What I told you about that, the 50% of the week it used as the 50% of the fair value gap. Okay, the constant encroachment of the fair value gap. How you use that on? You will use the same. I mean, the 50% of the week the same way. They have both of them has the same job. Okay, so don't think it is useless. It is, I mean, way more what to say, the valuable factor. Okay, 50% of the week. Now, why this week? Before, I mean, when price was over here, I marked the 50% of that week. When this week failed to hold the price, I marked that high. The market should take at least that high, but it didn't take that high. It has made relatively equal highs. It came lower. Where did it came? To the last 15-minute fair value gap. Now I would love to come here. I marked the inversion fair value gap from hourly chart. Okay, but if you see, this is the 15-minute last fair value gap. I talked about this before. So price came where? Where did it came? To the 15-minute last fair value gap. Okay, no problem. Now I have marked another inversion fair value gap over here from hourly chart where price came to the 15-minute fair value gap. Market has taken liquidity, market structure shift, breakaway gap. This is the place where you should take your buy. Our well-known setup. Price came to that 15-minute, exact that 15-minute fair value gap. If it would fail, I would love to see the last fair value gap, as this fair value gap is just below the liquidity level. That is why I didn't care about that fair value gap. Okay, as this fair value gap is above the liquidity level, so in my opinion that is the fair value gap which has perfect value until it is not broken. If it is broken, then I will go for the last fair value gap. So price come to that fair value gap perfectly, went higher, came here, made the relatively equal lows, started to go lower. Why did it came? Last fair value gap from the 15-minute chart. Now we have all of this 15-minute last fair value. Brother, you are talking about 15-minute last fair value gap. How many 15-minute last fair value gap you have? Every single leg has a last 15-minute fair value gap. This leg, I have this last 15-minute fair value gap. This leg, I have this last 15-minute fair value gap. That leg, I have this last 15-minute fair value gap. So every single leg, when price started to go lower, I showed you how this last fair value gap holds the price. This was the last fair value gap when price was falling. Okay, then when this was falling, there was no last 15-minute fair value gap, so that was not important. Now price is going higher, this is the last fair value gap. Price is going higher, this is the last fair value gap. Look over here, look closely. Okay, now I am just making my chart more stressful. This is all consolidation. Price falling to that leg. Do you see any fair value gap? There's no fair value gap. Price went higher, it went lower, it went higher on one time, it went lower. Do you see any fair value gap? All of this area. I don't see any fair value gap to all of this area. Now when price came lower, it went higher. Where did it came? Let me mark. Oh man, last fair value gap. Seriously? It came to the last fair value gap? Are you kidding me, man? Oh, you are kidding. It came to the last fair value gap. Until this portion, it came last fair value gap from the 15-minute chart. So after this fair value gap, I have another fair value gap over here. See this one, but this is not last fair value gap. Why this is not last fair value gap? Because this was at the same level. This is not a swing or some kind of swing, because this is the inside price action. You can't see that it went higher. This is a leg. This is a leg. So many candle I have. This is a leg, but there is just two candle. This is just fall. It fall. So there is at least three, one, two, three, four candle. I have four candles. Price came here. That fair value gap. And if you go to the 1 minute chart, you will see the price action over here. How beautifully the last fair value gap worked over there. So from 15-minute chart, I can see directly this buy side liquidity. Very clean buy side. Now, what price can do? It can expand little lower. It can take all of this liquidity from there. I mean, if you just mark the liquidity from here, I just mark this low and that low, they're relatively equal lows. Okay, just if I go to 1 minute chart, you will see this clean sell side liquidity. Okay, so this low, that low, they're relatively equal lows. What price can do, it can take that sell side liquidity, then it can expand higher, though I don't want to see that. Why? Because when market will take the buy side liquidity, after that it will expand toward all of this sell side liquidity. See, all of this sell side liquidity from 1 minute chart, it will go toward that sell side liquidity. So first I would love to see it will keep all of this sell side liquidity, it will keep open. Okay, the sell side liquidity will be opened here. Now look all of this price action, this is the consolidation. Okay, so price is consolidating over here to that specific range. This is the first time price went below. The retail trader, they started to think, okay, market is falling, let's sell, 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 sell. They started to sell, market went higher. When market went above that high, they started to think, oh man, no, we should take buy. They started to take buy, 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 buy. Okay, price came here, failed to take that high, and went below one more time. All of the people who has taken their buy, they are stopped out. Now price is exactly here. What should price do? Where it should expand now? Toward the obvious liquidity. What do you see your obvious liquidity? Relatively equal highs or relatively equal lows? Is that obvious, brother? Or this low, that low, that low, that low? Just if I can make it, I don't know I can do it or not. Just let me try. Just give me, let me take a chance if I can. Where is it exactly? Think. So no, not this one. Just a second. Just I was talking, right? So I will get some. I can use. So if you do, you think this one is clean sell side liquidity? So is this the clean sell side liquidity or the support zone, or this one is the clean buy side liquidity or as a resistance zone? What do you think? It's up to you, brother. Now everything can be changed. I am repeating, everything can be changed depending on the Sunday open. And if you ask me about the Sunday open, it will take maybe another 2 hours to explain the Sunday open. I guess another day we will discuss about the Sunday open. Everything can be changed. Okay, but right now, if you ask me, gun to my head, this buy side liquidity on my table. I would love to see market will take that buy side liquidity. And after taking that, it will expand little higher, but finally it will come back again into the range. Okay? The expansion will happen because yesterday was the inside day. Let me show it to you. So this is inside this. See this candle? This candle is inside that candle. So this is a inside day. Now when it is inside day, we were expecting a inside day because this candle was inside that candle. So it has taken the low, it has taken that high. When it has taken both sell side liquidity and the buy side liquidity, the very next candle you have to expect a inside day. Okay, you can write it down to your note. I mean, rules book or something. Not always, nothing worked here always, not 100% of the time, but 90% of the time you will see inside there. If it is overzealous, I mean take sell side buy side, you will expect inside there. Now when you will see a inside there, you will expect some kind of expansion either way, either the buy side or the sell side. That's different matter. I have already explained the things over there, what I am expecting. So that's all about the Nasdaq. Now, the question part, do you have any question? Is it clear to you? Do you think you are actually learning? You are getting the things slowly? What do you think? You have to explain me that. Man, I'm just talking, talking, talking. I'm tired, man. And this is the time to read your comment. Comment something, brother. Brother and sister, if there is any woman. I don't think so. I have any women. Actually, I have a one. I got her from my Twitter. So I think I have one woman follower, but most of them are my male friends, brother. I always used to the word brother. This is the question part, and you have to ask me the question. You have to write down something. You have to give me the thumbs up. You have to do all of this. Okay. Please don't force me to talk, 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 talk. I mean, continuously. Don't force me to talk. Okay. Write it down. Just do some work, physical work, brother. Don't give me so much pain. Everyone actually objection. Some people actually object that I talk too much. Like ICT talk too much. I talk too much. Oh man, really? Still very clear analysis, no question. So what I'm thinking that I should make the analysis much more, I mean, confusing. If I make the analysis confused analysis, then you will start to ask me the question. Then I will understand that how many people are over here or who are over here. How about USD? Would you love to go me over there? Okay, let's go to USD. Let's go from the weekly chart. I didn't see the market, so I think we move them all. So far, I can see the sell side liquidity from the weekly chart and the monthly fair value gap, weekly fair value gap is cool. Let's come here to this volume imbalance. This is weekly volume imbalance. Everything is clear, Remy. Everything is clear. Okay, Remy. Everything is clear, man. I should make this confused. Okay, so here I will make this confused. Okay, so that you can ask me the question. I'm gonna make this more confusing. I will add something. Okay, that's why it will be confusing. It come to the consequent encroachment from the monthly week. There was a week from the monthly chart. It come to that week or the consequent encroachment of that week, and this is the last fair value gap from the weekly chart. You can see price has been rejected from that last fair value gap. I will force you to learn the last fair value gap. That is the reason. See, it failed to hold. I mean, it hold the price. I'm expecting lower run. Now market went lower. Where did it came to that order block? Okay. Then this is the inside. I mean, weekly candle inside this candle. Prematurely, I'm thinking expansion candle now because this candle is inside that candle. So I am expecting if it will have to go lower and if it can take that low, it will expand much more lower. After that, if it would love to go back again inside the range, that doesn't matter. If it would love to go higher, if it can take that high, I mean this high. Did I talk about that high? That candle? No. The very next candle. If it can take that low, this candle's low, then it will expand lower. If the very next candle can take that high, this weak candle's high, it will expand higher, then it will expand lower. From weekly chart, I'm expecting lower run for the Euro USD. I'm expecting, okay, because I don't see any reason that market will go higher. I don't see any reason for that. The last until this fair value gap will hold the price, I will expect market will go lower. If I see market went above, I mean the body close above that last fair value gap from the weekly chart, I will expect market will go higher from weekly chart. Okay, this is the expectation from weekly. Narrow imad. EU is bullish. I have just started to analyze the EU, brother. So just wait some more times, brother. Go see DXY weekly. I didn't understand, brother. What did you say? I didn't understand. What did you say? You have to elaborate your thinking or your understanding, whatever you are just writing over there. Weekly, DXY weekly is bearish. Okay. Brother, I have actually explained the things about DXY. If you have time, you can watch the first part of this live. You will understand what is my expectation from dollar index. Okay. So I'm not that kind of guy who will tell you that it is going higher or it is going lower because nobody can tell that. Not even the ICT. ICT even can't tell that market is going higher or it is going lower. You can expect something depending on the price. and if you see prices actually working with your expectation, then you will be confident that maybe market is going toward your expectation, maybe market is going lower. So you can't just tell that market is going lower or it is going higher. So you have to wait for the price action. And if you ask me about the dollar index is a place where it is in indecision. You can't tell that dollar is going higher or dollar is going lower because it is in consolidation mode. Okay. So I think if you just watch the first part, you will understand what I mean to say. So right now over here, price is over here and it came to this order block. I would love to see market will go lower until the sell side liquid, I mean take the sell side liquidity until this fair value gap will hold the price. So from weekly chart, I'm expecting lower run. When it will take that sell side liquidity, before that I have this low, the mean threshold of that order block, this low, then maybe there is relatively equal lows here. Every level will be target, okay, one by one after another. So you don't need to spend so much time over here. You can go to daily chart. So this is the daily chart, and from the daily chart you can see the same thing. I mean, it failed to come to the last fair value gap. This is the daily fair value gap, and last fair value gap, it failed to go over there. Instead of that, it closed inside this weekly fair value gap very perfectly. It closed over there. It went lower, and I can see this is my inversion fair value gap. Right now, price come to this inversion fair value gap because above there is no other fair value gap. Okay. So this is the inversion fair value gap, and you don't need the inversion fair value gap. You can see it come to this fair value gap, and it went lower. There is your last fair value gap from the daily chart. It even come to this fair value gap as well. Right now price is over here. So you have to wait for further price action. This is pure consolidation from the daily chart. Just think this is the 1 minute chart. What do you think about this? This is the consolidation, right? Pure consolidation. Market is not going higher. Market is not going lower. Sir, is there any mentorship by you? How can contact with you? Dev K, you can contact with me through my Twitter, okay? Okay, I can show it to you. I mean, this is the free advertisement, so I can do this thing, this advertisement. So if you go to my here, I mean, at the rate of NRT12345 or ICT Trading Concept, you can contact with me over here. I mean, you can message me. Everyone can message me over there, and I actually reply to all of them. Okay, and I don't have any private mentorship or anything. I have only this public place or public area where I talk about the price. So you can contact with me over here, brother. So right now price is in the consolidation mode. I don't know where price will go, but I can see price come here to this order block. It come to this fair value gap. That's cool, no problem. This daily fair value gap didn't trade yet, and from daily chart I have nothing to say. I mean, I have no bias depending on that price action. Okay, I have to see where market would love to go. It has to leave this area first. When it will left this area, I will decide where market is going. But from as I talked about the weekly chart, I'm expecting lower run. So I would love to see it will go through this daily fair value gap, then it will target that low, relatively that those lows, and finally it will take that sell side liquidity because I don't see any buy side liquidity over here. I have only the sell side liquidity. It can go little above first and take that relatively equal highs. Whatever it will do, I will see. I mean, let's see. So let's go to hourly chart. See, pure consolidation, very clean consolidation. Okay, so I don't know when I have actually marked this sell side liquidity. Okay. So this is the order block. If you remember the daily order block, this black line is the daily order block level. Below that order block level, I have this relatively equal lows. See this low, when it has taken by that low, it was a shallow run. That's why I put my sell side liquidity level just below that low. That is gonna be my sell side liquidity and more stronger sell side liquidity. Below that sell side liquidity, I have this daily fair value gap. Now, price come here. Where did it came? this is a leg from here to here. Okay, this is a price leg from here to here. Now if I just break, this is a leg, consolidation, this is a leg, consolidation, this is a leg. So I have three legs. In this three leg, I have one last parallel gap from hourly chart. This is the last parallel gap from hourly chart. Okay, this is the buy side liquidity. Just let me mark it. Okay, this is the buy side liquidity. If price can take the buy side liquidity, this hourly parallel gap, I will see if it can hold it or not. If it can hold the buy, I mean price, then my market will go lower. If it failed, market will go higher and take that high. Now look at this run. Everything is my buy side liquidity. Okay, over here. When price is taken, where did it came? The last parallel gap from the hourly chart. Now there is another parallel gap from the hourly chart above that parallel gap, above this parallel gap. Though I don't mark it as my hourly parallel gap because this is very small and not obvious. That is why I didn't mark it. Price come here, it has been rejecting, I mean rejected the area one or two more times, two times, or I mean not one, two times, so many times over here. At the same time, it has made this relatively equal highs. Okay, that is actually shallow run. So that is actually your relatively equal highs. So I would love to see market will go above. It will take that buy side liquidity first. When it will take that buy side liquidity, either it will be rejected from that little, very little 1 hour last fair value gap, or it will expand more higher. It will take that high buy side liquidity, and it will be rejected from that fair value gap, last fair value gap. All I want to see, it will take that sell side liquidity. Before taking that sell side liquidity, maybe it will expand higher. Maybe. Okay. Now you have very clean buy side liquidity, you have very clean sell side liquidity, you have very clean consolidation. You have to wait for further price action. Price has to give you a sign that I would love to go here or there. If you see it started to take that buy side liquidity, it went higher, then come back again inside the range, there is much more possibility market is going to take that sell side liquidity. If you see it started to go higher, take that buy side liquidity, after that it has made another liquidity level, take that sell side liquidity, give you a very nice market structure shape. This is gonna be your target. This buy side liquidity is going to be your target. Let me go to 15-minute chart. From 15-minute chart, okay, I have this last fair value gap. So if price can take that buy side liquidity, this last 15-minute fair value can be hold the price or not. We will see that in a way. Okay. On the other hand, we have relatively equal lows as well. Let's see how it react. I mean, until it left the area this high, that low, until it is broken. The either way, it has to break that line. When it will be broken, I'll be sure about the bias. Until then, I can expect something, but I'm not sure what it will make or what it will do. Okay, so that's all about the dollar index. I know it's not very clear or clean price action over here. The thing is, price is not clear, so how can I explain the things clearly? That is impossible for me. Okay, so I think it's okay about the forex as well. I mean, I don't know what to say, but anybody has any question? If you don't have any question, I'm gonna close my session. Okay, I need to eat now. Okay. Just I know I'm 32-second delayed. I'm just waiting 32 seconds. If you have any question, I'll try to reply them. Otherwise, I'm just gonna close my session. Okay. Okay. And please, if anybody is new here, don't forget to subscribe. If you like, okay, then you can subscribe to my channel. If you don't like, you are free to fly. I mean, if you can go away. If you didn't give me the thumbs up, please before leaving this area, give me the like. And I think it's done. I mean, the 32-second is done. Nobody has no question. I guess so. Okay, then that's all for today. And I guess everyone will have a very nice weekend. Best of luck, best of learning, guys. See you. Bye bye.